Hello everybody, I'm Tom Dorsey, President Dorsey Wright & Associates. It's June 3rd, 2011, and let's talk about the India Minute for just a moment. First off, I'm going to be over to India the end of next month. We're not sure about the exact date, but I certainly hope that I can visit with most of you over there. Hopefully Tushar, the CEO of StockEasy, will put some programs together where I can kind of meet and greet people. I would love to do that, to meet the people that we talk to every week. Let's look at your overall market. The long-term trend in the Nifty is still up, and that's the 100 rupee per box chart. That's the long-term picture. It's still there. Shorter-term picture I'm not too thrilled with. As far as those of you who are traders, I'd be a little bit reluctant to be out trading right now, although the stocks that Ben gave you last week are all doing very well, up about 4, 5, 6%. But the overall picture on the shorter-term basis, I don't like it when it breaks that long-term trend line, which it has done. Now, I think you're going to have kind of a wishy-washy market here, and here's why. When you look at the U.S. markets, one of the things that's going to happen, I think, is you may see the U.S. markets kind of push and pull the international markets along with it. Our bullish percent index is not only on defense, but it has exceeded a previous bottom. In other words, a double bottom sell signal. We typically don't look at patterns in the bullish percent index. We're more interested in field position and whether it's in X's or O's. But whenever it makes an attempt to move back up and that fails, and it comes back into a column of O's, it tells you there's clearly a trend of net new stocks going on sell signals and buy signals. We've been on defense now for over a couple of months, and it's playing out as that. We don't know how long this will last, but the name of the game is you don't have possession of the football. As far as the Nifty in India is concerned, I'm a little bit worried about committing a lot of cash to it right now. If you look at a normal distribution of the indexes and the ETFs in India, they really all pull back to the middle of the bell curve. So if you think back to Statistics 101 in college, that normal distribution, most of them have pulled back to the center of the bell curve. The only things that are still on the overbought side of the ledger is the gold Bs and the other types of gold indexes. The distribution curve for the NSE indexes has even pulled a little bit to the oversold side of the ledger. So we'll have to see how that plays out right now. As far as our DWA model is concerned, you can get that on the Dorsey Wright system by clicking through on the StockEasy system right to us. The model is doing well. It's beating the Nifty 50. It's beating all the indexes. And this is a model of 5 different stocks. It's automatically managed for you. This is where I want you to eventually get to. It's like I've mentioned, the Harvard professor who once said that when you create a product, you need to create a solution for someone. And this solution to him was you can either deal with the 1/4-inch drill or you want the 1/4-inch hole. And I think most of us are interested in the 1/4-inch hole. You all have jobs to do. You have a life to live, your family, your wife, whatnot, your friends. You may play soccer or cricket or whatever it may be on the weekends, and you want some sort of a solution. That's what we provide you with the models. So stay tuned. These models are already being run for you. When we make this available to you on the StockEasy site, I think you're going to be amazed and delighted at what this will do for you. So I want you to begin to think about, check with Tushar, the CEO of StockEasy, the dates that I'll be coming to India. It's going to be great. I hope I can meet many of you there. Talk to you later.